Market focus remains securely on the Eurozone developments, with the summit held over the weekend. However, there was very little concrete developments coming out of the summit so far, and Eurozone officials are expected to continue on Wednesday to keep discussing. Now, there are a couple of key issues that remain on topic. In particular, the extent of losses that banks will have to take from holding Greek bonds. Now, banks are only offering to take a 40% loss on holding this debt, but government officials are looking for them to take something closer to 60%. In addition to this, Eurozone officials need to also decide exactly how they will leverage the bailout fund so it has more effectiveness. Nonetheless, despite lack of conclusions, markets seem pretty optimistic about the extent of discussions so far and were fairly upbeat over the weekend. Added to this, we saw some stronger earning results from the US, and this helped contribute to a strong rally in equity markets over the past few days. Also, on top of this, we've got fairly strong expectations for US GDP growth over Q3, and at the margin, this is also adding to some confidence in the markets. In this environment, the New Zealand dollar has been quite strong and has now shifted above 80 cents against the US dollar. At the time, it was currently sitting just under 81 cents against the US dollar. We can expect the New Zealand dollar direction to remain dominated by offshore events this week, and can expect a lot of volatility to remain in the New Zealand dollar over the coming months. It does appear that European officials will take their time in resolving the Eurozone crisis. Economic data we've had out over the long weekend was relatively mixed. First up, we had some Eurozone economic indicators, and these were quite weak, which is to be expected given the amount of uncertainty currently in the region. But we also saw some upbeat data from China, with a very strong manufacturing indicator read. Markets were very encouraged to see this result, as it shows that economic activity is holding up reasonably well in Asia. Now, turning back to New Zealand, we've got quite a big week this week. It all starts as we turn our focus from rugby onto politics. Today we've got the Treasury's pre-election fiscal and economic update. This provides an update on the economic projections and the implications for fiscal revenue forecasts. And this kicks off the election campaign. Also out today we have New Zealand inflation data, and this comes before the Reserve Bank of New Zealand's official cash rate announcement on Thursday. We're expecting the Reserve Bank of New Zealand to keep the official cash rate unchanged at 2.5%. Uncertainty coming from the offshore, particularly given Eurozone, is going to keep the Reserve Bank on the sidelines until at least March next year. Even then, we expect the official cash rate will increase relatively slowly given the amount of uncertainty that's likely to continue and the relatively elevated level of the New Zealand dollar providing some restraint.